Welcome back, everybody, to Investing Warrior, and today is an exciting day because we have our first portfolio review. The goal of this portfolio is to generate passive income through reliable dividends. These companies are not speculative, but boring companies that generate so much profit that they reward their shareholders through distributing those profits in the form of a dividend. I hope to retire someday off these dividends, and this portfolio is the vessel in which that will allow me to do that. So with that being said, let's dive straight into the portfolio. So we ended the week at $11,979. And as you can see, we had quite the volatile week. We ended up pretty flat on the week, minus 0.53%. But in these days, we were down at one point almost $500. We ended the week only down $64. So as you can see, very volatile week. And then the 1 month doesn't paint a better picture. We're down $1,000 even, so 7.71%. I'm not too worried about it. As prices go down for these stocks, their dividend yield goes up, so that's just better buying opportunity. And let's see. So this week, I was down negative 53% or 0.53%. Excuse me. The S&P 500 was down 1.41%. The QQQ, which is the tech companies, was down 0.56%, and then the Dow Jones was down 1.5%. So as you can see, even though it's a short glimpse, we did beat all three major indices this week, which is like to see. We like to outperform those. So yeah, let's dive into the companies this week. So DGRO, this is like an ETF that tracks dividend growth companies. Its biggest holdings are like Apple, Microsoft, Pfizer, Procter & Gamble. Just a really safe ETF. And this makes up about 30% of the portfolio. And this week it was down 0.24%. Really, this one was really is down almost 3%, and then it ended the week essentially flat. Yeah, nothing. I didn't buy any of this week, but. And then the last month, it's down 5.5%. Yeah, this is just a great ETF for the long term. It owns like 400 companies. Nothing really to say about that. And then the Lockheed Martin, this makes up about 7.5% of the portfolio. And this week it was down actually 2.82%. I own 2 shares. I bought it way back. I bought about like 10 shares back when it dipped all the way down here. And then I haven't been bought. I actually sold at the top here around 460. And then I've been holding on to 2 shares because it's still an amazing company. But I'd like to see that share price definitely come down more around my cost basis, around $336. And then the next company, Waste Management. This is one of my favorites. This is it doesn't get more boring than a trash company, but this company is just a beast. In the last 5 years, like you can see, just 120%. It's an amazing company. It's only about 4% of my portfolio, but I bought it in about 116. If it gets anywhere closer to 130, I'm definitely buying more into this because this is one of the safest stocks I feel like in the entire market. And then Apple, the last week it was down 5%, which is amazing. Anytime you get in my opinion, one of the top 3 best companies in the entire world, you definitely want to capitalize on that. And as you can see, my average share is $123. Anytime if it dips below 140, I'll definitely look to buy. I had an opportunity here, as you can see, 139. Guess I wasn't looking, but yeah, if it dips below 140, I'll definitely consider adding to this position and even increasing my cost basis. The next one we got Microsoft. So this makes about 3% of the portfolio. This is one I definitely consider adding. If it gets below my cost basis of 241, I'll heavily buy into this. We got close. We got $9 off, which is amazing considering that this used to be above like 340 essentially, and the fact that it's pulled all the way down, and this is again one of the top companies in the world, definitely consider buying more as it pulls back. And then the next company, AWR, Up, wow, 3.5%. I actually just did a stock review of this of this company, and as you can see, my average cost $76. When it dipped all the way down to below 75, that should have been your buying opportunity. I mean, this makes up 2% of the portfolio. This is an amazing company. If you're interested in this company, I did do a stock review on it, so go check that out. And then we got TORO is the next one. They 2.13%. Pretty huge dip here. I'm not sure what happened there, and then bounced straight back. Up to, yeah, pretty good week, I would say. Makes up about almost 3% of the portfolio, $84 a share. I feel like there's better opportunities of buying in the market, but I might pick up a share here or there, or lower that cost basis. They're pretty flat year over year, or over the last 5 years, and they had this big drawdown from raw materials costs. I'll definitely be looking to buy more of this on a bigger pullback. The next one is A.O. Smith. They are up 2.21% on the week, and this makes about 4% of my portfolio. This one's a really, this is just like water heaters and water filtration. This is I think this is like a $10 billion market cap company. It's kind of small, but it doesn't get more reliable than water heaters. People are always going to need their like water heaters. It's a very safe business. And then, as you can see, my average cost $63.22. I feel like there's better opportunities in the market, but with a bigger pull down, maybe closer to 55, I'll definitely consider buying. And then we got JP Morgan. This one I feel like is criminally undervalued. I mean, as you can see, it was just trading sideways around 150, and then a huge downturn. Its dividend yield is over 3% right now. I bought it 5 shares at 126. If this gets closer to 115, this should have been my opportunity. I think it traded to like 115. Yeah, 115. I'll definitely consider picking up a few shares. It's a great bank. It's the best bank in the world, in my opinion. It's very diversified in their revenue. And yeah, as you can see, a huge pull down in the last, like 9 months. And then the next company would be Lowe's. So this is one of my favorite ones. I picked this up at 4 shares at $203. I'm actually down on that position quite a lot. If this gets below, where am I? Below 185, probably I'll definitely consider buying. This is another great company. This is a compounding machine. It's gone up really, really well in the last 5 years. It's just had a recent pull down. And then, so the next company is Dominos. So this one's a rough one. I jumped in the boat at $400 per share after seeing this huge decline, and then I've essentially, this is one of my worst performing ones, down 15%. I bought it obviously at the wrong time. It just continues to go down, but I really like Domino's business model and how they make money. They franchise. They don't own any of their stores. They just franchise, and then they get that consistent franchise royalties and all that. Yeah, and so I'm not looking to buy here. If it gets dipped below 300, I'll definitely look to buy, but I feel like there's better opportunities in the market. I'll talk more about TORO here in a minute. And then Disney, they just reported earnings. I made a video about that, and they are down, or essentially flat on the week, down 0.8%. Nothing crazy, but you could see they were down almost 8% at one point, and they rebounded, which we like to see. My average share is $137, so I'm down 21%. Nothing. This is a tough one because I think it's really undervalued. But like I said, they don't pay a dividend, so it's hard for me to justify buying this over some other companies in the market right now. But anytime it dips below 100, I'll definitely be looking to add. And so let's go into the week. So this week, we received a dividend from Apple. It was only 92 cents, but $4 a share, or for 4 shares, 23 cents payout, 92 cents. That's nothing crazy. I know it's only $1, but this is just it's steps forward. Hopefully one day I hope to make that $10, $100 payment from Apple. So it's just baby steps to get there. And then we got another dividend coming in from A.O. Smith, 5 shares, 28 cents per share, $1.40. I think that, yeah, tomorrow is going to get paid out tomorrow. And so for my buys this week, I bought 4 shares of TORO price at an average share of $118.20, which gives me a dividend yield of 4.06%, which is amazing for that. And their stock price, as you can see, it had a really it was down 3% on the week, but at some points it was down, I think, close to 8% on the week when it was at $114. And the reason they had this huge pull down is because they had some news. So what TORO price is, they're an asset manager. So as you can see, their assets under management fell to 1.42 trillion, all the way up from 1.6 in March, and even 1.7 trillion in December. And so they own a lot of like stocks and stuff. So with stock prices going down in the whole market, their assets under management go down, and they had like customers pulling their money out of the market, so that also drops their assets under management. So it was just a double whammy. So this stock's been absolutely killed in the last year. They're down 36%, but they pay an amazing dividend. They pay 4% dividend yield, $4.80 a year. So with those 4 shares I picked up, that adds $19.20 per year to the dividend income, which I make about where is it? About $230 a year, which is nothing. It's pretty small, but I want to get that up to closer to 1,000. Like that's the next goal, and then 2,000. It's just a snowball to get to retirement. And with their dividend, they've been growing their dividend at 15% per year, which is amazing. And so, like, with me locking in this 4.06 dividend yield, it will just increase year over year, and they've been paying it for 36 years, which is amazing. I think you can't go wrong buying TORO at these prices. And just from a little, so they're, like I said, they're asset under management company. With these market volatility, it's opened up the real door to picking up TORO, I feel like. So that's the portfolio review. Nothing crazy. Hopefully we can have a better week, a positive week actually, and then turn around this 1 month. But if you guys like this content, make sure to subscribe and like, and I'll catch you in the next one. Peace.